Good evening and welcome to the Business Day. I am Sandy Williams. Tax Administration of Jamaica has extended the deadline for manufacturers of non-alcoholic sweetened beverages to obtain licenses under the special consumption tax regime to Friday, May 15. The extension follows a meeting involving the Jamaica Manufacturers and Exporters Association, the Ministry of Finance and the Public Service, and TAJ as stakeholders continue to adjust to the new tax framework. Cameron White tells us more.
The SCT on sweetened beverages took effect on May 1 as part of amendments to the General Consumption Tax (GCT) Act. Manufacturers affected by the measure are required to be licensed under the Excise Duty Act and registered with TAJ. TAJ said the extension is intended to give manufacturers additional time to comply with the new requirements. As part of stakeholder engagement efforts, the agency hosted a webinar on May 4, attended by more than 350 participants to help businesses understand the legislation and compliance obligations. A follow-up online panel discussion is scheduled for Thursday to provide further guidance and allow manufacturers to raise questions about the tax as well as licensing and registration requirements. The panel will include representatives from the Finance Ministry, the Tax Policy Unit, and TAJ's Legal, Excise, and Technical Specialist units. The tax applies to beverages containing added sugar or artificial sweeteners, including carbonated drinks, sweetened juices, sports drinks, energy drinks, and flavored water. Under the revised structure, the SCT is charged at a rate of 0.22 Jamaican dollars per gram of added sugar or sweetener, a shift from the originally proposed volume-based system. The change followed industry backlash and consultations with stakeholders, which prompted the government to adopt a model based on sugar content instead. Minister of Finance Favour Williams said at the time that the revised approach was intended to better align with public health goals by directly targeting sugar consumption. The government has positioned the measure as part of a broader fiscal and public health strategy aimed at reducing high levels of sugar consumption and tackling non-communicable diseases while strengthening revenue collection. As a result of the tax, consumers may see price adjustments for affected products. Cameron White, TVJ News.
Financial conglomerate NCB Financial Group reported lower headline profits for the 6 months ending March 31, 2026. However, the company says its underlying business performance remains strong despite economic headwinds.
For the 6 months ended March 2026, the group reported consolidated net profit of 10.3 billion, compared with 22.2 billion in the prior year, while net profit attributable to stockholders of the company of 7.2 billion, compared with 13.3 billion in the prior year. The decline in the current year profits was primarily attributable to the 15.1 billion gain recognized in the prior year from the disposal of the Netherlands-based insurance brokerage business. Importantly, as we assess the core performance, excluding the one-off gain, net profit for the period would have increased by approximately 3.3 billion or 46%.
Operating expenses declined 6% to $48.9 billion, while total assets climbed to $2.43 trillion in March, up 3% when compared to the same period last year.
Insurance service results improved to 15.1 billion, up from 9.6 billion in the prior year, while net insurance finance expenses declined by 75% or 8.4 billion. The lower net profit for the current period resulted in return on equity of 7.15%, reducing from 15.06%, return on assets of 0.85%, down from 1.90%, cost to income of 72.71%, up from 63.18%.
Chief Financial Officer Malcolm Sadler maintains that the normalized figures point suggests its fundamentals are improving with positive momentum continuing across its main business segments. The JSE index declined by 34 points today, while the junior market index declined by 24 points. The winners include Image Plus Consultants, Blue Power Group, First Rock Real Estate Investments, Innovative Energy Group, and Radio Jamaica. The losers includes KLE Group, Caribbean Flavors and Fragrances, Cargo Handlers, Caribbean Assurance Brokers, and Cygnus Credit Investments US dollar ordinary shares, 27 stocks traded firm. Foreign exchange trading ended with banks and cambios selling the US dollar for an average $159.24. The Canadian dollar is being sold for $117.57. The pound is going for $216.49, while the euro is selling for an average $189.47. Motorists will get a break this week with a slight decrease in petrol prices. Each liter of 87 gasoline and 90 gasoline will be decreased by 25 cents. Automotive diesel and ultra-low sulfur diesel will also fall by 25 cents. Kerosene will see its price slashed by 25 cents. The cost of propane will fall by 25 cents, while butane will go up by $2.94. Each petrol station will, of course, make these adjustments to their prices, which include a markup on the ex-refinery rate offered by Petroleum. And that's the business day. I am Sandy Williams. Good evening.